This week, we have hit a new all-time high in the S&P 500 and the Nasdaq, and this is all on the backdrop of a still developing US-Iran war. Oil is above $100 still, and the Strait of Hormuz is still mostly closed, despite what both parties says that it is going to open. And the US and Iran are literally seizing each other ships. So in today's video, I'm going to share with you what is actually happening, because there are real reasons on what is happening underneath the surface that most people are actually just brushing across. So I'm going to cover what actually moved the markets last week, what the earnings season is telling us by going through some of the companies that have already reported, as well as what you need to absolutely watch in the coming weeks ahead, because the most important earnings night of 2026 is going to happen this Wednesday. So let's get into it. Let's start with the big picture on why markets are doing what they are doing and why it actually makes sense when you understand the full story. So, as we all know, the US-Iran war started in late February, and back on April 8, Pakistan actually brokered a ceasefire between both parties, and they were both agreeable. But ever since then, it has been pretty fragile. Both sides have been violating it, and we are seeing news of US having total control of Strait of Hormuz, Trump saying that after Iran seizing 2 container ships. And at the same time, we are also seeing the same news that US has seized Iran tankers after attack rock Strait of Hormuz. So we can see that the situation is still very, very fluid. And when you look at the video of how the traffic in the Strait of Hormuz is, so this is updated as of 23rd of April, you can see that there is still not much ships actually going past both sides because of fears that either party might start to do something and it will cause a threat. Right, so this is what is actually happening now, right? We have the US saying they have a blockade, Iran wanting to include like some sort of a toll booth on the Strait of Hormuz. So you can see that ships are still unsure whether is it fully open or is it still closed. And throughout the past 2 weeks, even after the ceasefire, there have been renewed ceasefire talks, right? And one of it was actually a trip to Pakistan that was going to happen this week. But what is the latest information that we've got as of today, which is that Trump have actually cancelled the trip of US representative going to Pakistan for even more negotiations and saying that they sit around talking about nothing. And he actually tweeted out, he said that too much time is wasted on traveling and there's a lot of infighting and confusion with their leadership. And nobody knows who is in charge on the Iranian side, right? And this is what Trump is saying now. And despite the backdrop of this ceasefire talk still going on, markets are still at all-time high. Like we are rallying hard the past week. Why? It is because earnings delivered something that was even louder than the war headlines. You have seen that something has shifted in the market. And the company that really set the tone for the entire week is a company that most people have completely written off the past 2 years. And that company is none other than Intel. Now, Intel's earnings was monster. It was a massive beat. You can look at the revenue in terms of the estimation as well as the EPS. It all beat expectations. And the more important thing is actually their guidance ahead. Their Q2 2026 guidance is actually higher above the estimates. Gross margin also improved. And you can see all of their metrics looks like it is improving. So Intel is right smack at the center of that semiconductor wave. They are running on the made in USA foundry, right? And you can see a stronger than expected revenue and a huge swing to profitability actually caused the stock to go up 16.5% after hours. Not just that, that is before the market actually opened. But when the market closed on Friday, this is actually where Intel actually went to. It was up 23% on the day. And by this time, right, Intel had already gained 50% for the month of April alone. And this is his biggest monthly gain since, listen closely, 1974. In 50 years. And it has really passed its all-time high back in 2000 after the dot-com bubble. So we are in historical times right now. Now, here's why this matters beyond just companies' earnings. Because Intel was genuinely a cautionary tale just 2 years ago, losing market share with manufacturing delays as well as they're burning cash. But that was until the new CEO, Lip-Bu Tan, came in early 2025 with a mandate to turn it around. And from his thesis, It was very simple, which is that AI is moving not just from training, but to inference, to agentic computing, and all of that runs on CPUs and not just GPUs, which is where Intel has a very strong market share. And this quarter, that thesis got validation from the biggest name possible. Google expands partnership with Intel for AI chips. They have committed to use their CPUs in its data center. And not only that, Tesla as well. So this is even latest news. They also announced 20 of April, around there, that they confirmed that they will use Intel's 14A chip manufacturing process for its AI chip complex. And they're going to spend about $3 billion on chip fab. Now, for a company with zero major foundry customers a year ago and was on the verge of being obsoleted because of players like Nvidia and AMD coming to eat the market share, they were literally on the verge of being a company that no one will care. It shows that Intel's story is moving a bit differently from here on. And not only that, so this was actually back in August 2025, and it was at that moment in time, it was one of the news that got the market moving and got Intel to have the first run up, is when the US government buys 10% stake in Intel. Because as we know, Trump is very positive and very supportive of the Made in America movement. And this is, at the moment, it was one of the latest move for Trump administration to push for more private sector control, holding a 10% stake in Intel. And at that moment, Intel was about $30. So this position that the Trump administration has had has probably at least close to triple from the initial purchase. And Intel wasn't the only semiconductor company that was printing fantastic numbers this week. We also had SK Hynix. So SK Hynix is a South Korean memory chip giant. And this week, they reported what I can only describe as a historic quarter, right? Look at their revenue. It is up 60% quarter on quarter, and year on year, it was up close to 200%. Not just that, look at their operating profit, look at their net profit and their margins, right? And their Q2 guidance, as usual, it was even higher than what the market expected, right? So they're very strong Q1 driven by surging HBM demand. So HBM is what SK Hynix has the biggest market share, 57%. It is part of the semiconductor supply chain, and because they are one of the leaders, they have very strong pricing power in the market, right? So you can see it was superb, and not just them, right? They actually lift up the overall semiconductor industry, right? The broader semiconductor sector reflected all of this. So this is the iShare Semiconductor ETF. And in April alone, in just a 1 month movement, it is up 40%. And not only that, we are seeing companies like Micron, AMD, Broadcom, all up like 40 to 50%. Now, there's actually a really interesting story that's developing about the whole semiconductor supply chain and why they are actually leading this rally. In fact, we are seeing one of the strongest rally in semiconductor, and it's been going on for the past 2 weeks already. And I'll be doing a full dedicated video on this soon. So if you want to see it out live, be sure to like this post below, and I'll be sure to push it out as soon as I can. It's going to be very important for all investors to understand now, so you don't get caught chasing the rally too. And apart from SK Hynix and Intel, we also saw Tesla reported their earnings. Now, their earnings told a slightly different story, and the reaction was a little bit mixed. So you can see that their revenue, it was up, slightly beating in terms of what was expected in terms of their EPS as well, their gross margin, and even their free cash flow. So they are doing okay. And right after they announced, the stock actually popped after hours. And as usual, Elon Musk came up and they also shared that they are not going to focus a lot more on autonomy and robotics and AI. So again, Tesla is no longer just a car company earnings story. So do not look at it as if they are like other companies like Ford or General Motors. No, for Tesla, they are more of a robotics, AI, and autonomy company in future. Okay, so Elon Musk also came out and said that they're going to spend 25 billion in capex, and up from their earlier guidance of 20 billion. Okay, so this is what they will share, and Elon also said they are going to build the largest chip fab ever, which also explains the partnership that they have with Intel that I shared earlier, right? He also talked about Optimus robots entering production and the partnership with Intel. So you can see that the gross margins on the automotive side is actually expanded nicely. But for Tesla, right, the narrative have shifted to AI infrastructure. And we also have another news from Meta. So this is not Meta's earnings because while their actual Q1 earnings are actually coming this week, last week they actually announced something else entirely, which is that they will cut 10% of their workforce as their company pushes deeper into AI. Now, this is about 8,000 employees, right? And in the same breath, there is the same amount, billions of dollars going to AI data centers. And this is not just happening with Meta. We are seeing this happening across all industries. Microsoft, Amazon, Salesforce, Block, Snap, they are all cutting headcount. And so far from what I have saw earlier, over 92,000 tech workers have been laid off in 2026 so far. Now, you might be thinking, but Meta is doing so well. And not just Meta, a lot of the hyperscalers, they are doing well. Their revenue is growing at good rates and they are spending a lot on CapEx. So why are they letting people go? So the key thing is that it's not about distress. It is that AI has become so efficient that they can actually replace humans and do the work that usually requires large team. So that is a very, very different story from companies struggling, and it's a huge structural shift of where the markets and including the workforce will be heading into the future. Now, apart from all of this, there's actually also one company, and that is the fear of how AI might actually overtake not just that company, but the overall industry. And their earnings to us a story that scared the entire sector and is one of the most important ones representing the software sector, ServiceNow. And when we look at ServiceNow numbers, honestly, their revenues were good. Their numbers were good. You can see that they beat expectations. EPS were according to expectations as well. Then they beat on operating income too, including their remaining performance obligations. So it was a clear beat on every metric. And not only that, they also increased their full year guidance, and they also shared that their AI adoption, product adoption, is actually growing 130% amongst its top spending customer. However, the stock actually dropped 15% after they announced it, right? And there are two reasons for it. Number one is actually margin pressure as they integrate the Army's business, which is a business they acquire. That is one, but that is temporary. But on the other hand, another reason that they shared is because the Iran war actually created some headwinds for the business because of delayed enterprise software deals. Now, in my opinion, this is also temporary, but because of this short-term margin pressure, it scared the entire market into thinking that software companies are all going to be taken over by AI. And because of this one earnings, is actually brought down the entire software sector as well. So actually put it down because ServiceNow is one of the biggest software companies in the industry right now. So in my opinion, these two reasons that ServiceNow shared are actually temporary, right? The war will end soon, and in terms of the Army's acquisition, sooner or later they will be integrated. But it actually caused the fear of AI displacing software companies to reappear again. And because they are one of the biggest software companies, and that scared the market, which brought up the entire software industry. So, where does all of this leave us heading into this week? This week is going to be very, very exciting. It's probably going to be the most important earnings week of 2026. Now, let me walk you through of what is coming. So on Monday, we have some companies like Celestica, which are in the AI sector, and Verizon reporting. So nothing much, the usual companies. But when we come on to Tuesday and Wednesday, that's where things start to get exciting. We are seeing Robinhood, Bloom Energy, Seagate, all reporting, Visa as well, and Spotify. And on Wednesday, this is where the big guns start to appear. Microsoft, Amazon, Meta, Alphabet are all going to report on the exact same day after market close. And on Thursday, we have Apple as well. So to look at what the markets want to look at, the key thing that the markets will look at for all of these big hyperscalers are, number one, how much are they going to spend on AI infrastructure, right? That is what the market will be looking at, because so far the combined capex is expected to exceed 470 billion. And now the market has been pretty patient, and now it wants to see the revenue coming in. Now, apart from that, for Microsoft, we do also want to see the cloud, Azure cloud growth as well. And with Microsoft being down over 8% year to date, if they have a very, very strong earnings that supports that the AI adoption is getting better, it could actually reset the whole narrative there. And then for Alphabet, Google, we are watching Google Cloud's growth. For Amazon, it's AWS acceleration. And for Meta, is the ad revenue growth, as well as their new AI LLM that they have created. How is it doing? How's the adoption? As well as a little bit more information about the layoff. Now, for Apple on Thursday, this is a slightly different stories about hyperscalers. So it is less about the AI infrastructure, but probably the focus will be understanding more about the new incoming CEO, John Turners, as well as iPhone demand and the service revenue. How is it holding up in a tariff-affected environment? And on Friday, we have Chevron and ExxonMobil. Now, this is where we will actually see the impact of oil. So their earnings were probably pretty decent from the first quarter where the war is at full scale, right? And the markets will be looking at what they expect to see in the next 3 months ahead, which is April, May, and June. And not only the earnings, next week we also have a Federal Reserve meeting. Now, this is the last meeting of Jerome Powell. It's going to happen on 29 April, and you can see that there is basically no chance that he will do a rate cut. The probability of him holding the rates is 99%. So again, Jerome Powell is leaving in May. So this will be his statement on what he will be sharing as he steps down. So I think that will be the market. What the market will be focusing on, what is his view on the economy, about the war impact, what he thinks about inflation, how is it holding up as well. We have also other macro data that will be announced this week as well. So that will also give us a little bit of insights of how the economy is performing on the backdrop of the war that is still ongoing. So here's my overall take. Right, we saw market hitting back all-time highs in the middle of an active war, even though oil prices is still elevated. And you see, it was so noisy over the past few months of the war. And now that earnings have started, right, the markets are starting to see again what is the future going towards. And the future is clearly moving towards AI, right? And this is the companies that matters most to long-term portfolios. They actually deliver. And for those of you who actually understood the thesis and build your conviction and hold on to these kind of high quality companies that are positioned ahead, now congratulations, because you actually participated in this week gains. Whereas if you actually waited for the headlines to get clearer, or you're probably now still waiting for the war to escalate, let me tell you that you probably will not. I think that there's a lot more certainty that the war will simmer down as compared to it escalating even more. So remember that having clarity when you invest and very cheap prices, they often don't come together, right? That's not how the market works. You can't really get the best of both worlds each time, and it never has been the case, right? You build conviction when things are uncertain, and you get rewarded when things become clear. So this coming week will tell us a lot because of the hyperscalers reporting their earnings, right? And the AI monetization story will either get validated or get questioned. That's all that I have for you for today's video. If you do enjoy such content, be sure to hit that like and subscribe button. It will really help me to create more of such content for you. So thank you, and I'll see you in the next one.